When should you sell a stock? You buying shares or stock is one part of the battle. The second part of the battle is you knowing when it is ideal to sell. And I'm saying so because a number of people out here either sell too early, therefore missing out on upwards potential on that stock growing over time, or even so, they might hold for long, therefore seeing their potential profit disappear just because they are holding for long. That is why in this video, I want to discuss 7 signs it could be time for you to sell a particular stock which you are holding, or even so, take a detour from your investing position. In case you are new here, my name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you videos about making money and investing each and every day. In case these are topics which you like, down there is a button called subscribe. Kindly click that button for you to subscribe to my channel so that you don't miss out on any of the videos which I upload each and every day. And while you're still at it, drop a like on this video. Thank you for subscribing and liking this video. And the first reason which can make you sell your stock is because your investment thesis has changed. Out here, people invest for different reasons. In case your investment thesis has changed, that could be a sign that maybe you need to sell a particular stock. Case in point, maybe you bought a particular stock because the company had a very good strategy which management was executing, right? The company had very stable earnings which were making you believe that stock is going to perform well in the market. In case these fundamentals have changed, for example, management is no longer executing the strategy as envisioned. Basically, you feel management is not promoting increase in value when it comes to shareholders' value. And even secondly, the key fundamentals, like for example, the earnings which made you invest in this particular stock, those have changed substantially. That could be a sign that it might be okay for you to sell because your investment thesis has changed. Simply put, the reason as to why you bought that particular stock no longer exists. That merits you changing your position. And then the second reason which can make you sell your stock is if that particular stock has become way too overpriced in the market. Case in point, that particular stock, its price is exceeding the values in the book of that particular stock. Simply put, the market is overpriced in that particular stock because you're looking at the price is not even commensurate with the company earnings. Simply put, key aspects or indicators like the book value, the EPS, all these are pointing towards that stock not being in a healthy position, and yet the market is pumping up that particular stock. That is going to be telling you that the price is being driven by very high speculation or even excess excitement, which is not anchored on fundamentals. That could be a sign for you to get out of your holding position. Reason being, in no time, the market is going to rectify that particular price. Simply put, the moment which you are seeing extreme overvaluation, the next thing you're going to see is the actual valuation happening. And that, in the market when it's factored in, is going to make the price of a particular stock to depreciate. And if you continue holding, you're going to experience something called share price depreciation. And unfortunately, once the market is hit by these fundamentals not being in good health, that particular stock will even go way below its book value once the market figures out it's been extremely overpriced. That is why it might have been strategic for you to offset your position before those corrections happen in the market. So in case a given stock is extremely overvalued and you have solid analysis showing you that, that may be a sign for you to change your position because the price are going to dip in the coming future. And then the third reason which can make you sell your stock is because you have found a better investing opportunity. Let's face it, the reason as to why you bought a particular stock, you did buy it because you thought it is a good investment. Simply put, you are looking for a way of you investing your money and then enjoying a return over time through either capital appreciation or the possibility of the discretionary dividend. So in case you get a better investment opportunity, you might be seeking capital reallocation, right? Maybe the money which you have at hand is not sufficient to be able for you to be able to capitalize on a new investment opportunity, which you are very sure has a higher return compared to the return which you're going to get through your stocks. That might be a sign for you to sell that particular stock which you are holding with the aim of you unlocking capital to plow that capital in the new investment opportunity. And there's nothing wrong with that in case you are doing capital reallocation. And then the fourth reason as to why you might let go a given stock is because company fundamentals have really deteriorated. And the fundamentals, we're talking about things like, for example, the earnings, okay? The profit the company is making. Things like the debt which the company has, how the company is managed. In case these fundamentals, for example, the earnings are declining year in, year out, right? The company is continuing to increase its debt levels, even to the point where you as an investor, you are thinking the debt ratio are very scary. Maybe the corporate governance issues in the company are becoming negative and more pronounced by the day. That is a sign for you to change your position by going short, simply you selling your stock. And that's so because if the fundamentals are overwhelmingly screaming negative, also that perception is going to hit the market because the market is driven by investors' sentiments. So if the fundamentals have deteriorated, that is justified grounds for you to be able to change your position by going short and utilizing that particular capital which you unlock to be able to either invest in a different stock or even seek a different investment altogether, okay? And then the fifth reason which can make you sell your stock is in case your stock has become extremely dominant in your portfolio. Simply put, you are not selling the stock because it is bad. You are simply rebalancing your portfolio to ensure your portfolio is constituted in a healthy way. Because in case you have one asset in your portfolio which is extremely dominant, that is also not a very well constituted portfolio because it is risky. In case that single asset or that particular single stock doesn't perform very well, it means the net effect in your portfolio is going to be negative. That is why you can sometimes rebalance. In case that single stock has become extremely dominant in your portfolio, you can rebalance to kind of again have a balanced portfolio by maybe reducing its position and then increasing other stocks in your portfolio or even bringing in new stocks based on the analysis and research you have done. There's nothing wrong with that. It is just part of you ensuring you have ideal risk management through the constitution of your portfolio. And then the sixth thing we can make you sell your stock is in case you have an important financial goal which you need to achieve. Case in point, maybe you are buying a home, okay? You are buying new property, okay? You are funding education. You are looking for funds for retirement. You name it. All these are important financial goals. So you could utilize part of your investment in the stock market by releasing some of the funds you have in a given stock to be able to assist you achieve that particular financial goal. Maybe you want to buy a house, right? You have 80% of the money. You are short of 20% of the money. But then again, you know it is the best time for you to buy that particular house. You might sell a given stock to be able to unlock the funds for you to be able to complete your financial goal. There's nothing wrong with that, and that's a justified scenario for you to go about selling a given stock to unlock money to be able to achieve a key financial goal of yours. And then the seventh tip for you is that assuming nothing has changed across all these things I've spoken about, you as an investor, then you don't need to do anything, honestly. Because the way I said, the reason as to why you invested is because you invested, you want to get a return, either through share price appreciation, okay, when you are cashing out the capital gains, or even the possibility of you enjoying the discretionary dividends, right? So in case nothing has changed around the company fundamentals, the fundamentals are looking good, corporate governance is looking good, the debt ratios of the company are looking good, the share in the market even is maybe underpriced or is at par with the different valuation metrics, okay? You don't have a pressing financial goal which you are looking to pursue immediately. You don't have a competing investment which can make you unlock money through the stock market to invest in that alternative investment. Then you don't need to do anything. Don't just sell shares because you feel like that. Selling shares or selling stock need to be informed by a concrete reason among the reasons I've shared herein, or any other reason which you might have, which you really believe that financially it is merited. If not, continue holding your position, because either way, you are gaining through share price appreciation, and even you might be enjoying dividends, which at the end is a return which any savvy investor is looking for. Guys, those are the 7 considerations which you need to make as you are deciding whether to sell your stock or continue holding. What do you think about this video?